Hello, can you hear me? Uh, okay, thanks. I'm not going to uh, take up a lot of your time. I'm going to share, is there anything we can do? Is there any better option to grow your savings? So since everyone can hear me and see what I'm sharing, we're going to start the session now. So, give a brief introduction of myself. My name is Max. I'm a relationship manager with Philip Securities. I'm based in Ang Mo Kio branch. So, if you ever been to Ang Mo Kio branch, I believe you could have seen me in the branch before. Okay, so yep. Okay, a bit of Philip. We started since 1975. We are biggest stockbroker in Singapore. Also, we have present in other country in the world. So I'm going to skip most of the part in this corporate introduction, so we can skip to the main point of today's topics. Okay. So, okay. So, what I'm going to introduce you today is Philip Money Market Fund. If any of you have Philips trading accounts, and if you know what is a smart park, then you high chances you know what I'm going to share with you next. Uh, a Philip Money Market Fund is a Philip Money Market Fund is a fund that invests mostly in government bonds, a little bit in corporate, so you can enjoy no locking period, while your interest rate, your return of the fund will be as good as a saving deposit or even sometimes better than your deposit with the bank. Mm. So the some will ask why you go for this money market fund since the rate is very similar to bank FD rate. The reason that is that you can have the flexibility to take out your fund any time of the day or of the year, and you'll receive your money the next working day, and the return is still remain the same. And we calculate the return on a daily basis, so you won't lose out any return if you take out your fund like even only for 2 3 days in the fund. Okay. So a free money market fund is an open-ended fund. We aim to preserve a principal value of your capital and offer a high degree of liquidity for investor flexibility. To me, that's actually quite important, especially look if you see some opportunity coming in, you might lose out your interest if you break your FD. However, if you put your money with money market fund, you can take out your fund anytime without any penalties or any break of your return. Okay. So this is the chart of our Philip money market fund. We've been managing these funds since about 20 years, and we never see any days that the fund lost and perform a negative in a single day. So we are very proud and very confidently to share that this is the fund that you really should consider to replace your FD, or at least you can put some of your deposit in this fund. So some will ask how we do that. How can we perform uh, so liquid and also the return higher than the saving account? So what we do is we invest in the short term and high quality money market instrument and debt securities. To put it in a very layman term, we invest in a very short term government bonds, which might usually within within 60 days or 30 days, the bond will mature and we'll get our money back soon. So the benefit of it is, uh, if a debt securities mature within such a short period, it's very it's not sensitive to interest rate movement at all. So I believe you all understand that the longer interest rate is actually one big factor when you invest in a debt instrument. When interest rate hike, your fund will get impacted by your capital will reduce, and in fact impact your performance. However, we put our investment, those government bond, government securities, keep in a very short duration, so the impact to the fund is very, very, very low, equal to none. So we also have put certain a percentage of the fund into fixed deposit. With that, because our amount is bigger than the individual going to the bank, so we can have a better purchasing power. We can ask for a higher rate from the bank. So these are the holdings of the fund. You can see most of the holding, the top 10 holdings is definitely you will see MS Bill, which mature. This is not the latest one. This is a few months back. So you can see the bill matured in July, August, and yeah, this is how we manage it. We keep it in a very low duration. Yep. Weighted average maturity is about only at 40 plus to 50 days. Okay. Yeah. The return of the performance and the return of the fund since inception is 13%. This is the iClass. We only launched it like 5, 6 years ago. And compared to the original fund, which we already manage it for more than 20, slightly more than 20 years, they are the same. iClass is the one we charge you lower management fee or expense ratio to give you a better return. If you're interested, you can text me or you can drop me an email and we can discuss further about this. So the other thing I want to share with you today is that money market fund, they are the return of the money market fund are very, very close to fixed deposit or saving account that you, of course, you can't expect more because you can't expect too much from it because this is the underlying asset government bonds and very short term bonds. Yeah. Okay. So why I should invest in the money market fund? First thing, definitely the initial amount is very low. If you look at the normal money market fund, you can start from $100 to see how it works. So can try a bit first, get more confident, then only you can put more into money market fund. The risk is very, very low, and because of the structure of the fund, we put into very low duration bond, and of course, government bond are a very safe investment tool. So better you than deposit account. That's quite depends. Some of the bank account they pay you lower than even 1%, so we can definitely outperform them. Then yep, the rest are well-established fund manager, yes. Safety. Oh yeah, some of our clients they actually put their money with us is because there's another layer of safety. We all know that currently we have a lot of scam case, and if you put your money in your bank and they manage to hack your account, they can transfer your money out within a second. But with Philip, they need to if your money is with Philip Money Market Fund, when they do withdrawal, the money can only go back to your bank account. So there's an extra layer of safety to your fund. And the last one, keep your fund liquid and always ready for better opportunity. That's the best part about Philip Money Market Fund because you can enjoy a relatively good return or keep your money very liquid. You can take out anytime and put into a better investment opportunity. So other than this, other than money market fund, the other few things that you can consider are short duration bond fund and investment grade. Okay. There are there are five funds here that I'm going to, I'm not going in depth. I'm going to share with you that like fund like Sustainable Reserve Fund. This is also a very low duration bond fund managed by Philip as well. The duration is about 2 years to 2 to 3 years. There you will see some impact by interest rate movement or uh, sorry, but overall the impact of the interest rate is actually still considered very low to the fund, and this is something you can consider if you're interested to step a bit further into bond. Then we have PIMCO, uh, a very reputable, very well-developed manager that you can consider to put your money there. Then we have Nicole short-term bond fund, also another short-term bond fund that you can consider put your money in to replace your saving account or deposit. Okay, I think that's almost all of my sharing today. Is there any questions or anything you all want me to clarify? You can leave your question in the chat box, then I'll answer accordingly. Okay, thank you. 2, 1, 2. If there's no question, thank you everyone for dialing in. You can always drop me an email or text if you want to know more about the money market fund or any other unit trust fund. And yep, I think that's all from me today. Thank you everyone for dialing in. And yep, thanks. Goodbye.